Don Hodges from the Hodges Fund is up from Texas to talk about his favorite stocks. Welcome, Don.
Hello, Greg.
All right, always great to have you up here in New York. Let's start off with Delta. This stock has been flying year to date, up over 40%. So why do you want to stick with it?
I think it's got some real potential yet. I think within the next couple of years, Delta will be earning $3.50 a share, and it trades at 17 today. And I think it could go to the mid-20s, and we're holding on to it. We started buying a couple of years ago and have some good gains in it, but we're staying with it.
All right. You're also a fan of Johnson & Johnson. They came out with earnings about 2 weeks ago, beat by a nickel. A lot of that was due to new drugs. Tell me why you like it.
The main reason we like Johnson & Johnson is it's a high-quality blue chip that they've raised their dividend every year for 50 some odd years. The yield on it now is around 3%. I think we're going to see a lot of money flow out of bond funds sometime the next 2 to 3 years. And I think a lot of that money will go into high quality blue chips that pay good dividends. And it's just one of those companies that for the long term is going to do well.
All right. Now, you're also a fan of Cracker Barrel. We don't have a lot of these up here in New York. They report earnings on May 20th. What should we be looking for when they come out with their results?
I think they'll have good earnings. Cracker Barrel is an unusual restaurant chain in that they have a retail store combined with their restaurant. People go in to eat, invariably end up buying things. There are a lot of low-priced items, shirts, just novelty type items, but they get business from their food, and they also they probably average close to $1 million a year of sales in their little retail shops that people stand in while they wait to get in the restaurant. And you drive by a Cracker Barrel, and the parking lot is always full.
That's the old Michael Lynch, right? You
Yeah.
check out the parking lot.
Right.
All right, now finally, let's talk about Lockheed Martin. A lot of people thought that the defense stocks would get hammered because of all the sequestration speaking, all the talk about cutting defense budgets. Stock's going up. Do you stick with it?
It pays, the dividend is around $4.30, $4.40 at this price, and they'll probably earn around $9 a share this year. So even though it's trading a little over 100, it still looks cheap considering the PE multiple and the dividend that it pays. So we think it's just a good long-term holding.
All right, thanks a lot, Don. Always great
Thank
to have
you,
you up
Greg.
here in New York. Next
Thank
time
you.
in Texas. Thank you for watching The Street.